What's going on, guys? Kevin Cage here with another crypto update. We're going to dive right into today's video. So we're going to run through recent news for different alts. I did want to talk about the Bitcoin price chart for like 1 minute. You can refer back to my previous videos going over the charts. So the monthly time frame is a lot more accurate, but just looking at the past two cycles on the weekly time frame and the 21-week EMA, this purple moving average. So what we're looking at is when we got our first major move, that first full monthly candle body, or really just the big impulse of the weekly candles. So we got that first major move here. From the bottom of that, the swing low, just drawing a Fibonacci retracement up until that first initial peak before getting the pullback. So I'll just redraw this for you guys. Open up the Fibonacci. We're going to go from the swing low, or the start of the impulse, and then we're going to go to the high of the top of that impulse right there. We're just going to drag it all the way over. So in that scenario, from the first major move of Bitcoin breaking in the new all-time highs for that cycle in 2017, we can see we pulled back exactly to a 50% Fibonacci retracement. So that happens to also be along the 21-week EMA multiple times for backtests, which we usually see. Alright, next up we're going to look at last cycle. So we had a lot more QE. We really didn't backtest too much, and it was very parabolic for Bitcoin. So we got our first major move right there, taking out the previous cycle top, and I basically just drew the swing low on that wick. So I guess you could go on the daily. This gets subjective where you argue based on your wave counts the start of the impulse, but for this example I'm just using that. So from that swing low up until the peak before getting the first pullback for Bitcoin, we can see after that, Bitcoin ended up retracing down to the 50% Fibonacci retracement. So that same thing happened all the way back in 2017, as I just shared right there. Alright, so point being, and you might have even seen people talk about this because anybody that studies the cycles is looking at the same thing. We're in an uptrend, as you can see, and we are at new all-time highs. So if we drew a Fibonacci retracement from the lows, we could pick any of these lows. I mean, we're at 49K during that flash wick, and we moved over 100%. So pullbacks are no reason to be terrified, it's just market structure. So whether we draw the Fibonacci retracement from the swing low, I wouldn't really draw it from there for the start of the impulse, but we can see that we didn't even retrace to the 382. I would actually be looking closer to there, right at that wick, and I would consider that the start of the impulse. And we can see we've also come down to the 382. So we haven't come down to previous cycles reaching the 50%, but we can see the 21-week EMA is right on the 382. Now, if you think that the start of the impulse is actually right there, then potentially we're getting closer to the 50%. But compared to the last two cycles, we haven't even pulled back to the same degree. And the way I see this is we're in a range, and notice that this range was really wide, and thus far this is tight, so this could be enough. And in theory, even if we did have to come down lower and backtest these previous highs, that's still a fine count in an uptrend to actually do major moves, real runs for Bitcoin. So believe whatever you want, and this isn't financial advice, but I believe that Bitcoin ends up running significantly higher this year, 150k to 250k per the previous cycles. And regular viewers should get it because we ranted plenty about Bitcoin dominance over the past month, and the levels that I need to see for me to say, okay, we're not getting another cycle, is if Bitcoin closes a full monthly candle under the 8-month EMA, which we're not even close to. But we can see that right here. So we do have backtest to this 8-month EMA per past cycles, but as long as I see the candle body actually holding, even if we get sharp flash wicks like we did back in 2013 or even August 2024, I think we're fine. But that's my bias, so please make your own decisions. We need to see where this monthly RSI closes at the end of the month. But anyways, let's dive into news. Alright, next up, so I realize I just spoke for a few minutes and I said 1 minute, but you guys know me. So anyways, we have here shared by Coinbase Institutional for Coinbase Derivatives LLC now offers CFTC regulated futures for Solana and HBAR, bringing more institutional grade crypto products to US futures market. So basically, we're getting more crypto futures in the United States that are regulated by the CFTC, and we can see at the forefront of a new era for crypto derivatives. So now we can see that Coinbase Derivatives LLC, or CDE, now offers 19 futures contracts, including futures on Bitcoin, Ethereum, Doge, Stellar, Gold, and more. We can see their different assets in this list for their products. So we have Litecoin, Bitcoin Cash, Nano Bitcoin, Nano Ether, Micro Crude Oil, Gold, Polkadot, we have SHIB, Chainlink, AVAX, Silver, Stellar. Where's XRP? And a little bit about derivatives that I'm sure you guys know, but the derivatives market in traditional finance is significantly larger than the global stock market. So let's ballpark and say that the global stock market, even a year ago and today, is over $100 trillion. For global derivatives, it's very intangible. If you look at the notional value, that value is like 600 trillion to even $1 quadrillion. And if you look at the gross market value with the actual risk exposure from BIS, or the central bank of all central banks, they estimate like 12 to 15 trillion. So whether it's 12 to 15 trillion or over 600 trillion plus, that is huge. We have Coinbase explaining that crypto derivatives have become an essential component of the digital asset ecosystem, offering traders and institutions powerful tools for risk management, capital efficiency, and strategic exposure. Every time I say the word derivatives, it's like a tongue twister for me. But when you're thinking derivatives, it is basically anything that can be tied or contracts that are tied to stocks, bonds, interest rates, etc. So think futures, options, swaps. So when we think about derivatives in traditional finance, its market's notional value is like 5 to 10 times the size of the global stock market, so it's huge. But it's important to know that derivatives are leveraged and it's a synthetic market, so the size of the market can look much bigger than it actually is and be really inflated, basically based on the obligations or the contracts rather than the actual cash transactions. Alright, next up, I saw Merlin share that they now have the Hashback wallet, my favorite wallet on Hedera, able to connect to Merlin. So they have several options for wallets today, a lot of cold storage solutions, and primarily US-based exchanges, but a few others out there, and they're adding to this list. I would definitely like to see more Layer 1 wallet integrations, Algorand, Casper, Peak, and some of the newer kids on the block as well. So slow and steady. Feel free to check them out. This is linked right in the YouTube video description. You can set up customized exit plans, and I've also done a few videos going over them, and I use them today. We also have right here, Montana's Strategic Bitcoin Reserve Bill passes committee and moves to House vote, so that would be absolutely crazy to see a Bitcoin strategic reserve in the US. It sounds crazy until it isn't. Now, this isn't something that happens overnight, but this happening with the new administration, and according to President Donald Trump, this would be one hell of a catalyst. I also saw shared by the Algorand Foundation, so we have Travala.com has joined forces and integrated with Travago. This means that 120 million plus monthly website visitors across the 190 plus countries where Travago operates can now use Algorand and Algo native USDC-A, which is USDC on Algorand, to pay for 2.2 million new hotels and properties. So feel free to check out these websites, and we're going to see a lot more eyes on Algorand, which is good, and this is the future for a bunch of chains. It's going to be sexy, and the big new thing this cycle for all of these companies to start integrating crypto and using it. I really think there are a few key things, at least two things to come to mind that really change things for the crypto space. It's time passing, so enough time passes, people slowly forget about all of the black swans, the bad actors in 2022, and then also price action. So Bitcoin hitting 100K psychologically for the masses has huge implications, especially for adoption. And if we see the usual liquidity cycle, which I still believe in and I'm waiting for this year, and M2 rises, or we see the Fed actually shift and add to its balance sheet like we did in 2020, huge things can happen. Prices go up in a relatively quick manner in different impulses. We have certain waves of consolidation where it's boring. We have flash wicks that scare people out. And we're trying to find the cycle top, and eventually it's in. I just don't think we're anywhere close, per the past cycles. When I read Twitter or just YouTube comments, you can kind of gauge market sentiment, and this is not anywhere close to euphoria. Right now, we are in fear, boredom, even concerns of getting another cycle, which I think is normal. And apologies if there's background noise from the lawnmower, but hopefully my OBS filter blocks that out. I think there's a high degree of impatience, and I'm right there with you. But anybody that's never experienced a full cycle from the bottom to the top in 2017 or 2021 doesn't know what it feels like when you actually see assets do 10, 50x returns. And those people have a right to be frustrated. I mean, it has been a wild ride. It hasn't been as easy at all compared to 2020, March 2020, and then we just went parabolic. It's a lot more complicated. It's gotten more saturated, but I still believe there's huge upside potential in this market, and I definitely want to see all the people that have been here for the last 3-4 years witness another cycle. And even right here, so this went viral in the past couple days, this is Donald Trump, the president of the United States, real handle on his platform, Truth Social. So he posted about Ripple back to back. And big shout out to Bank XRP, an absolute must follow in this space, and he also linked it right there. So truthsocial.com showing you Donald Trump's real handle sharing this article. And Truth Social is a social media platform that was launched by Donald Trump and his company. This alone gets a lot of eyes on XRP and the entire crypto space. He's talking more about making the United States the crypto capital of the world. I know I roll my eyes at some meme coins every time they pump and dump, but there are big things ahead. We also know for a fact that Ripple CEO Brad Garlinghouse has had private meetings with President Trump, so I believe that XRP is involved. Could it be a reserve? Could it be related to custody, stablecoins? I did a video, I think last month, and we speculated on a few things, but something big is in store. Alright, next up, I want to play this very important clip of Brad Garlinghouse, Ripple CEO, in a Twitter Spaces, and this was a few weeks back, and this is shared by Good Morning Crypto. So I'm going to play this clip. He explains some very interesting things, going over the usual FUD points every few weeks or every few months we see of XRP going to zero, or stablecoins meaning that XRP is not needed, and blah, blah, blah. But check this out.
Yeah. First of all, I think this is important to understand the difference because some misinformation, as again back to the tribalism point, some people I think misinterpreted our view. We remain completely committed to the XRP ecosystem for a whole bunch of reasons. It's an incredibly efficient blockchain, and obviously we own a lot of XRP. We are totally committed. As a reminder, XRP is the native token on the XRP ledger. It's required for gas, reserves, accounts of ledger. But simply put, XRP is needed to use the XRP ledger. For Ripple and how we use it in our go-to-market as a cross-border payments, we use it as a bridge asset. It's very, very, very fast and nearly free for kind of per transaction basis. And we use it globally, and where currency conversions are less popular, if there's less liquidity, and that way it can complement a stable coin. So moving to the other side, Ripple has used stable coins for years, and we were using Tether, we were using USDC. And as time went by, we kind of asked ourselves, well, given how we at one point we said publicly we were minting 20% of all USDC. And so we kind of asked ourselves, well, wait a minute, could we participate in this market? And I think while we probably will still, use other technologies at various points, I think we felt like there's a real role for us to play here. And look, stable coins are required for on-chain payments. And as more and more assets get tokenized on the XRP ledger, I think stable coins are going to be required. And that's partly evidenced even by the Ondo announcement from earlier today.
So that clip alone speaks for itself, going over some things that we've gone over a long time ago, saying at one point they were responsible for minting 20% of all USDC, and they've used stablecoins for years. And Brad also points out, and I think he's referring maybe from a regulatory standpoint as well, is that stablecoins are essentially required for on-chain transactions. So all of these networks that have a stablecoin, it becomes even more important for them as more and more assets are tokenized and brought on-chain. And looking at RWA.xyz for total real-world assets on-chain, we're even higher than the other day. I think we did a video like 2 or 3 days ago showing this at 16.99 billion. So slow and steady, remember the predictions are over 10 trillion. And this website is referring to the crypto asset class for real-world assets. So I don't know if stablecoins tied to the US dollar should be reported here, but that's something to consider. So please let me know. But we can see some of these assets here. I don't know how accurate the reporting actually is when you're going over each chain and how transparent it is, but it's definitely a good gauge to look at these numbers. So we can see the RWA league table. We have a bunch of chains. We can include stablecoins or exclude them. And then down below, we have all assets. So these are real world assets. So we can see gold right there tied to a commodity. We have US treasuries, we have institutional funds, a few other things like government debt, and then down below I did see stocks earlier. So I don't believe that the Ripple US dollar tied to the US dollar would be in this list, but please correct me if I'm wrong, and it should be here, but I don't think it should be. Because it's not like we have USDC and USDT up here, but what's interesting is we have right here the Ondo short-term US government bond fund OUSG, and we know the partnership last month connecting to the XRP ledger for Ondo Finance's tokenized US treasuries. And right here it says that this exact token will be redeemable using Ripple's US dollar. And looking at the list of stablecoins by market cap, we can see the market cap is over 230 billion. So the stats that were shared was that they expect the stablecoin market cap to exceed $2.8 trillion, almost $3 trillion, which is close to the value of the entire crypto space today. I believe that was in the next 2 or 3 years, which sounds crazy. So considering today's regulations, even Ripple with all of their monetary licenses and a bunch of chains launching stablecoins, even individual companies, I would definitely keep tabs because I do believe that stablecoins have a huge place in the crypto space. And when you compare some of the top projects that have been around for years, USDT's market cap is over 140 billion and USDC is over 50 billion down below. We have Ripple, the US dollar, which is relatively new. We have a long way to go. So we're over, let's see, 100 million today, and we have the Euro coin, which is also MiCA compliant, over 100 million. So it's side by side with that, which I think is pretty good. So I hope you guys enjoyed today's video. I know these things don't happen overnight, but the potential is there, and we're seeing what we need to. We are seeing more RWAs on-chain each and every year, despite multiple cycles of these booms and busts, and I believe that crypto is the absolute future. Now, it's easy for me to critique every single chain. There is no perfect investment or perfect asset, and I definitely want to see higher numbers or actual activity for DeFi and tokenized RWAs on the XRP ledger. We have one, the stablecoin live, we have DeFi being developed, we have the automated market maker, and there are a bunch of partnerships that really set up the XRP ledger for success. So we have Archax, we have Aberdeen, which has hundreds of billions of dollars in AUM. They have the liquidity fund on the XRPL. Archax, as I mentioned, for tokenizing RWAs, launching the first tokenized money market fund. I want to see more and a bunch more activity, but I'm very happy with the progress because we are seeing it. And then even Zonix with the T assets for tokenization of real world assets, Ondo Finance. I could go on and on. But as always, thank you guys so much for watching, and a huge thank you to all that hit the like button. It's a free way to support me in making these videos, and I will catch you in the next one. If you enjoyed this video, be sure to smash the like button and let me know your thoughts down below. You can find all links to my crypto resources, including tools for charting, trading bots, wallets, portfolio trackers, and exclusive discounts right in my link tree in the video description. Thanks for watching, and I'll catch you in the next one.